Hello and welcome. As America's economy started collapsing, it wasn't long before other countries started to show the same cracks in their financial systems. Each nation has tried to come up with a salvage plan, but many wonder if it's going to take something bigger. Is a globally unified economic plan even possible? The relatively new G20 Club of Nations came together a few days ago in Washington, D.C., but left pretty quickly with little more than an agreement to meet again in spring. So where is the momentum going to come from to bring together the crucial pieces for solid results? Today we ask, how do you keep the global recession from becoming a global depression? Remember, you can join our conversation with your questions and comments. Log on to livestation.com/AJE and enter the chat room to take part. We also welcome your phone calls on the show. Joining us from Bristol now in the United Kingdom is Pettifor. She is a senior fellow at the New Economics Foundation and author of The Coming First World Debt Crisis, a title which speaks for itself. On her blog, detonation.org, you'll find her frequently arguing for the restructuring of international debts. And from Austin, Texas in the US, we're joined by economist James Galbraith, the Lloyd Benson Chair for Business and Government at the University of Texas. He's author of The Predator State, How Conservatives Abandon the Free Market and Why Liberals Should Too. Dr. Galbraith supports greater regulation and believes that Europe lacks the structural institutions required to deal with this crisis. I welcome both of you to the show.
Good evening.
Dr. Galbraith, if I could ask you first if you feel we're heading for a global depression. If so, is there any way of avoiding it?
Well, so far, I don't think we're heading for a problem on the scale of the 1930s, but we are definitely heading for a major decline, and that has all the hallmarks of perhaps becoming unmanageable. And so I think there's every reason for the highest level of concern.
Ms. Pettifor, do you feel the same way in any way? I know you blame much of the problem on what you see as unregulated dependency on US Treasury bills across the world.
I'm more pessimistic perhaps than Dr. Galbraith. And the consensus here in the UK is that this is one of the most serious crises. Our Deputy Governor of the Central Bank thought it was the most serious crisis, economic crisis, financial crisis in human history. I think it is a very, very serious crisis. I think it's not so much the implosion of a property bubble or other asset bubbles as the implosion of a massive credit bubble. And I think that it's a long time since our public authorities, our central banks, have had to deal with such a meltdown, if you like, of an enormous, a gigantic credit bubble, which is global. And I don't believe that our policy makers are really prepared for it.
Well, Ms. Pettifor, if I could sort of bring to your attention some of the issues that have been taking place recently. The American industry, specifically the auto industry, has been going obviously to the government cap in hand begging for a bailout. And I want to quote an article from you in October in the New Statesman where you say, the big US and EU bailouts treated the symptoms. The disease is debt, and bailouts helped only creditors, not debtors, banks rather than homeowners, the world of finance rather than workers or industry. Now, I know you regard big government bailouts as treating the symptoms, not the disease. So should America be willing to bail out or provide any more government money in the case of General Motors, for example?
Well, my view is that the real crisis here is a crisis of debt and an excessive burden of debt. And what we have to do is help companies like General Motors, who have, very serious burdens of debt, to manage that debt burden, to ease that debt burden. So I think I'm neutral on what should happen to the auto industry, and I'm not really close enough to it to be able to comment. But I do feel that what governments and what central banks are not grasping is that we have to lower borrowing costs. We have to lower borrowing costs across the board, not just in base rates, but all rates, all commercial rates. And what's happened as the debt crisis has become worse and more damaging, so interest rates and borrowing costs have risen. This has worsened the crisis, it's not made it better. And it's as if our monetary authorities aren't sufficiently focused on that.
Well, let me get Dr. Galbraith back in here with an email question, sir, to you, if I may, from Michigan. It came in here in the US. It says, if the US auto industry fails, how will it impact the global economy?
Well, there will be knock-on effects throughout the entire American economy. They will be quite serious. It's not clear that you can have the failure of one major company, General Motors, without really imperiling the other two major American car companies. The supplier chain will go down. You would have serious effects on state and local governments as the workers are out of work and all of the other state and local employees are laid off. That would worsen the housing crisis. So there's every argument for prudence in favor of a loan that would get the major automakers through into the next year. We're in a moment of political transition here. The current administration can't do anything, and the next administration won't be up and running for 3 or 4 months. So that's the argument for a loan to the auto companies right now. It would buy time to get into a policy environment where you might be able to make some orderly decisions to put the companies on a more viable footing.
Now, what Dr. Galbraith, what our viewer Phil Brown in Michigan was asking was the impact perhaps on the global economy. Do you see it having a significant impact on other countries?
Well, a recession in the United States is going to affect our demand for imports from every place in the world, so yes, it will have an effect on the rest of the world. But I don't think that's fundamental to the problem that the world as a whole is facing. I agree. What we have here is a problem which is at its core the meltdown of the financial system with implications for the real economy. And that problem would still be there even if we managed to rescue the automobile companies.
Now, Ms. Pettifor, I know I've read your articles where you, of course, put a lot of the blame in recent decades where the dependency on the US dollar and the US economy as such, I guess, is at fault. Do you feel that there is any prospect for the world, the global economy, decoupling somewhat from the US economy?
Well, I mean, my analysis being that because of the way the international financial architecture is structured, it's based, if you like, the world's reserve asset is an IOU to the United States. It's a debt-based asset. And so, for example, China holds its reserves and holds its surplus in the form of loans to the United States at very low rates of interest, US Treasury bills. And I personally believe that this is not a sustainable financial architecture, and it's one of the reasons why we've developed such enormous imbalances in the global economy. We have a situation where the United States has moved from being the world's biggest creditor up until in the 1970s, and is today one of the world's biggest debtors, if not the world's biggest debtor. And China has a massive surplus. So we have imbalances in the global economy which are really quite dangerous, and in my view not addressed by those talking and thinking about the international financial architecture. To restore stability, we need to do something about what we use as the world's reserve asset, and the fact that the United States has been able to use its position as, if you like, the world's most powerful economy, and also issuing the world's currency, to live, if you like, beyond its means and to build up vast amounts of debt, while at the same time China has built up a massive trade surplus. And this is what is, in my view, at the heart of the volatility and instability in the global economy.
Dr. Galbraith, if I may quote to you quote to our viewers from your book, The Predator State, you say, "Protectionist is an all-purpose epithet deployed to defeat argument and stop conversation. Free trade has in this way gained the status of a god, second only to the free market itself." Now, to what extent do you feel the free market is perhaps dead in this climate?
It certainly is. I mean, I make the argument in the book that the free trade is kind of a myth. But I want to come back to this question of the global financial architecture, because I think I do have a substantial difference. I mean, first of all, the debt obligations are debts of the United States, not to the United States. The fact that the rest of the world wishes to hold United States Treasury bills and bonds has a great deal to do with the fact that the U.S. has a very liquid public debt market and a very reliable treasury. We used to think, and many of us here felt, that the euro was on the verge of becoming a reliable substitute for the U.S. dollar as a reserve asset. But the fact that this crisis has revealed that this is not the case. And I think there's a fundamental structure, a problem of governance inside the Eurozone a central bank that cannot act as effectively as the lender of last resort, and governments that could not really borrow to make good the guarantees that they're making to their banking system, which has caused an enormous rush into dollars as a flight to safety. That's not something the U.S. actually can do anything about, and it is going to hurt our economy next year because it's going to do great damage to our exports. So it is a part of the international financial problem, but I don't think it's really quite fair to say that it is a matter of American policy. It is much more a matter of the architecture of the world system and the fact that the United States is one large, very integrated and relatively well-constructed economy, in the sense that we have institutions that were built up in the New Deal and the Great Society, which are still with us. The European zone was created in the 1980s in a very ad hoc way, which is fundamentally problematic, and I think, in fact, may really be testing the limits of its viability right now.
Let's get a question in from Bart in New Zealand before we take a break. I'll get back to you, Ms. Pettifor, in a sec, but Bart, what would you like to ask?
Yes, why should we trust the government experts to solve this global economic problem when their ideas got us into this problem in the first place, but yet they didn't see the problem coming? And now we're turning to these same people to solve the problem. I just don't see the logic there.
All right, great question. We're going to try and get an answer for you to that after this short break. We do have to pause at this stage, though. And as we pause, let me remind you, you can join the conversation with your questions and comments by logging on to livestation.com and entering the chat room. The debate's taking place there. You can see on the screen below me. We'll be right back with more.
Don't